All right, this is Marco Palmero, founding director of Ulysses Investments. In this video, I want to discuss with you why an investor should work with us. Now, if you know our project, if you know Ulysses Investment, you know that we generally rely on debt sources to structure our acquisitions. But in this video, I want to talk about investors a little bit more and kind of like explain why our model can potentially be a great fit for an investor looking for a return of investment and maybe a good rate of return on his money. So, generally speaking, what investors do when they have a bunch of money is that they look for an opportunity that can give them a good return, and therefore they invest in projects or companies, and they get, a piece of the action, generally a percentage of the equity in the acquisition in the company or in the startup. And hopefully, if the project goes well, they will capitalize on that equity, and maybe they also have other sorts of agreement. But as a general rule, that's how it works, right? They get some equity in the startup, in the business that has been created, and they invest their own money to allow this company to develop and grow and kind of like hopefully become a successful organization. Now, that is a good way of doing things. I have nothing against it, but it is also very risky. And, we all know that a lot of startups fail. And so sometimes you gotta really be good and ascertaining whether or not this project will be any good. And even if you're good at selecting targets, you're still gonna make mistakes because everybody makes mistakes. And so you're really putting your money at stake in projects that really are not giving you a clear idea about whether or not you're gonna get your money back, right? So why is our alternative a good alternative for you as an investor? Well, first of all, because again, as I mentioned at the beginning of the video, we generally work uh, as debt with debt structures, which means you can start getting your money back early on, and potentially you're not investing money hoping the company will grow in the future, but you're just putting some of your resources at stake to get a rate of return at the end of each year, and you're going to capitalize on it and potentially get the most out of your money in 2, 4, 5 years. That's the first point. So it's not like investing your money and hoping the project will be successful, but is loaning money to someone who already know what he's doing, and then get a rate of return that is reasonable for the risk you're taking. The second point that I would like to make is that we, as Ulysses Investment, acquire profitable existing businesses that have been around for 5, 7, 10, 15 years and that have a proven track record of delivering results in a specific marketplace. And in this case, and in our case, we're talking about healthcare in the Middle East. Now, why is that important? Well, because we have a strategy that is tailored toward buying companies that are already make money, and also they already have a structure. So we're not talking about putting money into a startup or a new project that has a very good idea maybe, but everything is yet to be developed. But we're talking about putting your money into a project that it is consistent, has a proven track record, and is still delivering results, so you can potentially start getting your money back the month afterwards. Now, obviously, you might say, well, I'm not going to get the same rate of return. I'm not going to, my potential upside might be lower. Well, that is true, but your risk is also very, very low because we're talking about, putting your money into a project, into a company that is already established, that is working, that is profitable, that has consistent results over 3, 5, 7 years. And on top of that, we have, as a management team, we have more than 200 years of combined experience at Ulysses Investment working in this region, and we have in-depth knowledge in managing larger organizations. So we're not just startup guys trying to take an idea and bring it to fruition, but we're really starting with a consistent plan, and we are taking this idea and we're developing it in companies that are already delivering results. And so ideally, if you're looking to get, 8, 10, 12, maybe more out of your money in a year, that could be an option worth considering. You might structure it like private debt or in many other ways. I mean, we have multiple options for people that want to work with us because we always have acquisitions available. And depending on, you know, how much you want to invest and how you want to structure this thing, we have multiple options and solutions that we can explore. But the idea is that we are able to provide one of the most solid and consistent solutions for people that want to get a good rate of return, and they want to potentially deploy some capital and see it grow over time without taking that much risk.